All right, what's up, guys? Today's Friday. We're gonna go ahead and continue with our backtesting sessions. Right now we are waiting on JV to send in a chart. Not sure if he's still looking for that, but let's go ahead. I wanted to look at the dollar real quick, higher time frame, right? Now we can see we had talked about this for a minute, right? The market breaking and closing below this structure here, right? Now this is something that's in a specific, like, it's in an area where we need to understand what the market wants to do next, right? Because usually after a market changes direction, right? Market built liquidity, we get a break of structure upside, and then we change direction. Usually when we get something like this, the market tends to just hang out and build a lot of consolidation
Bueno,
in this area.
¿Por qué no
Give me a
te
second.
¿Quieres AirPods? Tengo los míos.
All right. So the market likes to go ahead and create liquidity in this area, right? So that's something that we need to watch out for and try not to play too aggressive. When looking with the dollar, just make sure you guys are using your confirmations and everything that you guys need in your confirmation checklist. So yeah, because again, like we would definitely like, continuation to the downside so we can go ahead and continue to pump, lower. But at the same time, we are waiting for the market to pull back either here or somewhere within this area where our starting points are. So the market can definitely pop up and then take that, that dip that we're looking for. So we just got to be careful here, right? We just got to be careful here. So as we come back this way, let's go ahead and clear the chart real quick. Let's go ahead and just clear this like that. Let's go to the weekly so we can clear this stuff up. All right. So look at this, guys. What would you guys consider this?
liquidity.
Liquidity, right? That's a lot of liquidity. Now, check it out. What happened before that? What happened before all this liquidity happened? Well, if we go this way, look at the structure that was given, right? We have break a structure. I'm sorry, higher high, higher low, break a structure. Higher high, higher low, break a structure. Higher high, higher low, break a structure to the upside, right? Now, as soon as we change direction, what happens? What builds up? A lot of this consolidation, right? Now, this took a minute. This started in 2003, right? You see 2003 right there, 2004, 2005. So this is a couple years of consolidation. Now, this is higher time frame consolidation, so there are some good moves in here still. But when we're looking at it at a higher time frame, we can still potentially wait for the market to come back into these areas. When? I don't know, right? We just have to stay ready. But at the same time, the market down here is either going to continue as soon as we got this confirmation that the market wants to continue to the downside, right? The market is continuing to give that bearish momentum. Now we're either looking for the market to give more bearish confirmations so we can continue to see if the dollar can sell off, or we're going to see if the market can make its way back in this area. Obviously, I don't know where it can respect this starting point and sell off, or the market can make its way up into this shoulder and sell off. And again, we don't know how long this is going to take. For all I know, we can just have 2 more years of consolidation after this and just back and forth movement for 2 years. I don't know, right? But the point is we already understand what we're looking for next. So if people start to say, oh, the dollar's been bullish, but we're seeing the market, pump up slightly. Well, we already know why the dollar is becoming bullish, because it wants to come for this zone here. Does that make sense, guys? Like, we shouldn't be surprised at this point, because as soon as it gave us confirmations here, we already know what we're looking for next. We should already be expecting, the next move. Now, again, that goes with expecting sell confirmation here, or waiting for the market to come back up. Now, let's take a look at lower time frame. Now, on the daily time frame, this is the structure that I'm seeing, right? We have a break of structure to the downside here, and then my change of character line would be here. So the market is continuing to hold this this zone, right? Lower low, lower high, lower low. The market can continue to hang out right here and continue down. That can happen. So if the market holds this area, right? If we do not break and close above this, we can continue down. Now, if we can continue and break and close above this, giving us a change of character, we could possibly get some more upward momentum, right? That's where we start to, expect the dollar to give some bullishness for a little bit, right? But now, as we continue to drop to a lower time frame, again, for me, I'm always looking for head and shoulder type structure in a downtrend, right? Sometimes it's not the cleanest, but if I could find something that looks like that, that's what I'm going to use. Now, inside this structure here, notice how we have liquidity being built up. Technically, all of this is liquidity, right? All of this is consolidation for sure, right? But notice how we have, let's get this out the way real quick. Notice how we have consolidation being built up. And then we slightly sweep liquidity here. Does consolidation liquidity always have the same form? What are some ways it may throw us off? That's a good question. Obviously, there are different forms of liquidity and types of consolidation. Usually, the most famous type of consolidation that's easy to see is when the market is moving sideways, right? This is usually called consolidation. Now, but at the same time, this is liquidity, right? It's mainly called consolidation because of how it looks, right? Because it's sideways movement. And this sideways movement would be considered liquidity because people are trapped inside of support and inside of resistance. Does that make sense? Now, there are some things that are called, trend line liquidity when the market is slightly going down, but you can see it's respecting a type of structure like this. This is called trend line liquidity. Yes. Now, I mean, it kind of has similar structure to the consolidation that's moving sideways, but most people don't call it consolidation because it's slightly trending down or slightly trending up. So they'll just call that trend line liquidity. There's another one, if I'm not mistaken, I just can't remember right now. Usually double top and double bottom, but usually that goes hand in hand with regular consolidation. But these are the main forms that I like to look for sure, because this will be everywhere. Obviously, other people will look at, double tops as liquidity as well. We'll have that right there. And then same with double bottoms. But I mean, I kind of just look at it the same way I do consolidation, to be real. So I try not to let multiple ways confuse me. I kind of just like combine these two into this one and then look for this, if that makes sense. I try not to overcomplicate liquidity, to be honest, especially for me. Like I didn't really know what liquidity was like my first year, 2 years, and I was still doing fine in the markets, just strictly focused on, market structure. So yeah, let that take that with a grain of salt, pretty much. But I hope that makes sense. So yeah, of course. So notice how we sweep these highs here, guys, but we don't sweep this high. So that may be a problem, right? That may be a problem. The market can probably sweep and close above this before heading down. Probably peak above. We might get that peak above to where the market takes liquidity, and then we start to get that drop. We don't know yet. Still has to develop, but just keep in mind something like that. But since I'm seeing this, right, this is the structure that I like to look for in a downtrend. Consolidation, sweep, continue down. And that's what I see right here. So for me, I like to go ahead and use that left shoulder action. Left shoulder move from the highest to it to my closest body. My stop loss would be the high in that area. And as of right now, the market's holding that zone. All right, the market is holding that zone. But again, notice, what do we see here? Market tapped into it once. Market tapped into it twice. What would this be considered?
Consolidation?
Yeah, a form of consolidation, right? So there's liquidity here. So I would not mind, right? This is also why I'm expecting a peak, market to go a bit higher. Hopefully, it can still hold the zone, sweep this liquidity, and then continue to drop. But again, market can definitely take these highs because of the liquidity at this area. So it's good to stay on your toes and understand the market and scenarios, right? So keep that in mind. But yeah, the dollar's in an interesting spot right now. In an interesting spot right now. So pretty much that's what I'm waiting for with the dollar. If we hold this zone, this would be my left shoulder because I can already see the consolidation. If we peak and close above, that's awesome. And if we can continue down, that would be great. So we can go ahead and look for some more scenarios. Would it be considered support and resistance? Considered a resistance zone as well? Yes. Well, what do you mean exactly? If you could unmute, that would be perfect. What do you mean by resistance? If you could mark up my chart, annotate where you're looking at, that would be great. Sorry, that water was smacking. Yes, for sure. That would be my resistance as well. Yes, correct. All right, let's go ahead and take a look at JV's picture. He ended up sending it a minute ago, but I was already in too deep with the dollar. In too deep. All right, this is NAS. All right, he is up. We're on the 2 minute. This is a 2 minute, JV.
Yeah, it's in the 2 minute, but that upper zone is like a 4 hour zone time frame.
Okay. And you said that you had trouble with it. You had to hit stop loss, or what were you talking about?
Yeah, hit my stop loss.
Okay. Let's go ahead and take a look. Let's go take a look. It doesn't look like you hit stop loss here. Where exactly did you hit?
Oh, that was like earlier in the day. That was like in the morning. But yeah, it went above my stop loss.
Okay. Well, let's go and take a look. Oops. All right. So 4 hour zone. Are we looking at this 4 hour zone?
Yes, sir. Yeah.
All right, cool. 1 hour. So where exactly were you looking at taking sales? Are we taking sales here? Like I want to understand exactly where you got stop loss at.
It was like at the 5 minute, like closer to the top, like at the zone. I think, yeah, right there.
Is this the play right here you just sent in?
Yeah.
Okay, I got you. Okay, cool. So let's take a look. This wick, right? This is the wick that he got in on. Right now. This is the thing. This is the thing, guys, right? Is a lot of us are playing on a lower time frame, guys, right? Now, if we go to the 5 minute or possibly even the 2 minute, because I believe that's what the picture said. On the 2 minute, this is exactly what we're looking at. Right. And yeah, I can see exactly what you mean, right? Market was making higher highs, higher lows, higher high, higher low, higher high. Market tanks. Right. I get that. I really do. And this is why for me, I try to stay away from lower time frames because it can be confusing. But not only that, guys, a lot of people will play the lower time frame and they still tend to counter trend. Right. We're again, like, what does that mean exactly? Now, when we go to the higher time frame, we're on the 1 hour. We're on the 1 hour, especially in this specific area. Let's just go ahead and just delete some stuff. Especially on this specific area, are we uptrending or downtrending? Uptrending, right? So should we be looking for possible buys or possible sells?
Buys.
Buys.
Yeah.
So even when we're on the lower time frame, guys, why not look for the possible buys rather than some possible sells, right? And I understand what you were trying to catch the snipe, right? You're trying to catch the very, very top of these zones, and I get it. Trust me, I do trust. I promise you, I get it. But as we drop down to a lower time frame, I've learned not to drop straight down to the 1 minute or the 2 minute because, yeah, okay. I've learned not to go straight down to the 2 minute and 1 minute and 5 minute and things like that, because those time frames tend to get manipulated a few times. Let me show you what I mean by that. Right? Let's just say we've been waiting for this zone for a minute, just like we all had, right? Consolidation, sweep of liquidity, markets dropped. We've been waiting for these zones for a while, right? Market makes its way back. Market makes its way back. Now, as soon as it gets here in this area, guys, we always tend to drop straight down. Now, let's just look at this. The black line, I'm just going to draw this right here. Is higher time frame. Blue line is lower time frame. Right? And this is where things get a bit tricky. Okay. Now, as soon as the market taps into this area, what do we do, guys? We always drop down to our lower time frame. And usually we drop down straight to the 5 or the 1 minute. Now, what does that look like? Right? We already know. Actually, if we're looking at this at the 1 hour or 4 hour time frame, guys, where are my BOSs? Can you guys annotate and mark up my BOSs on the way up to my sell zone? Mark up my BOSs, guys. Awesome. Let's go. Love it. Love it. You guys are all right. Solid. Solid. These are my breaker structures to my sell zone. Now, where would my change of character line be, fam? Where would my change of character line be? Awesome. My change of character line would be right here. So need change of direction for sell opportunity. Guys, do you know how fast everybody was able to locate my change of direction on the 4 hour or 1 hour time frame? Just like this. It didn't take long, right? It was easy to see. Would you guys agree? What if you guys just stuck with that 1 hour, 4 hour time frame? Why confuse yourself? If you know this is the rejection zone we're looking for, whether it's the shoulder or the starting point, if we know we're looking for a rejection and we can already see structure on the way up, why not just wait? You know why you guys don't want to wait? Who has any ideas? Why don't we want to wait for the market to give this change of direction?
We want the most.
We want the most. We want to catch every move possible. We want to catch the tip of the top, tip of the iceberg, because every pip we want, right? And it goes hand in hand with greed, right? Hand in hand with greed. It's okay. We can wait. We can wait for this confirmation. Let this change of character happen on the 1 hour, and we can find our next setup here and take the confirmation and send it down. Guys, if the market does what it was supposed to do and the market just continues to flow, what box is bigger? What box is bigger? This blue one or this red one? The red one, right? Guys, it's okay. Let the market give us the confirmation. But you know what? Most of us want to catch the whole thing. They want everything. They want everything. So they drop down to a lower time frame right inside of here, and they try to do their best to catch the very, very top. And I'm not saying you can't, right? I'm not saying you can't. You definitely can, right? It comes with practice. It comes with a lot of back testing. It comes with a lot of journaling your trades so you can understand, like, this is all mental repetition, right? The markets are going to print out these types of patterns and they want to confuse you. But the more you back test those lower time frames, the more you back test and have more reps under your belt, the more you're going to be more confident. This is why people say the market exposes your mindset. Exactly. Right. Well, I'm not saying you can't, right? You can't catch that, but you have to be aware. Now, I just wanted to do that real quick just to show you guys most of the time, you guys are very aware of that 1 hour, 4 hour change of direction line. But we try to do our best and we look for the lower time frame structures like this, right? Lower time frame structures. And as soon as the market gives us this right here on that 1 minute, we think it's the hitter. We think it's the one. Oh, I can't even zoom over. The heck? Let me push this over real quick. We think it's the one. But you know what happens? Usually it's not. Usually it'll probably give you 1-to-1, maybe 1-to-2, and then it probably starts to consolidate, and then it goes higher. And then what happens? You're going to see this, and then you're going to try to go in one more time. Probably gives you 1-to-1, 1-to-2, and then it just starts to hang out. Guys, what is the market doing right now?
Consolidating.
Consolidating. We're on lower time frames trying to catch the snipes when the market is consolidating. And then what happens? You've already lost once or twice, and then the real move comes, and then we're scared to enter when we see the real move. This happens a lot on that 1 minute time frame. A lot. So make sure you guys are back testing that. So for me, you know what I did? I jumped up a couple time frames. Let's say this is the 1 minute, right? Very, very ugly. I go to the 5 minute. You know what it looks like? It looks like this. Less candles, more clean. I go to the 1 hour. You know what it looks like? The 1 hour looks like this. It looks more clean. So when you start to see yourself struggling on those lower time frames, guys, jump up a couple time frames and the market structure will continue to get cleaner. In my opinion, everything that people stress about, you can always eliminate that. Like, you can always pull that out and be like, you know what, I don't have to do this to stress myself out. Does that make sense? 1 hour and 4 hour are good ones, you said? Yeah, especially when you're a beginner. 1 and 4 hour time frames are very, very good. You know, well, lower time frames, I'm not saying you guys can't. I'm not saying you guys can't go down. But it requires a lot more confidence, and it requires you to understand the strategy inside and out, because the markets move a lot quicker. Right? Exactly. Like Carlos said, when in doubt, zoom out. Right? So keep that in mind, guys. Keep that in mind. So when we go back over here, I don't even know where we're at right now. Right? Look at this. This is the first touch, right? He was doing his best to get in here. And I see the structure you're looking at. I see the structure you're looking at, and it actually gives an opportunity. Whether you're looking at the shoulder here, right? The stop loss would be the high, or you're looking at the starting point here. The stop loss, if you're looking for a tight stop loss, it would be above the highest wick in that area or the dominant high. Right now, it gives a move. It gives you, even with the tight stop loss, it gives you a move. Right? But now look, gives you 1-to-1, 1-to-2, break even, possible partial areas. And then what happens? it shoots up higher. So you know what you're a part of? If you were trading this area, guys, do you know what you're a part of?
Liquidity.
You're a part of the liquidity. You're a part of the liquidity. Just building, just building, just building, just building. You're a part of the liquidity. And that happens. It's okay. Like it happens. Like we're not gonna, like, not every trade we take is gonna be the one. And that's why you guys have to have good money management at all times. Because let's say this trade does hit, right? Let's say the trade does hit. We see that the market rejects off of this zone. Awesome. Okay, cool. This is my idea of the day. This is what I'm looking at. I've been waiting for a rejection here for sells. I see the structure, right? I see the structure that I want to see. And the market gives me a really, really clean opportunity. I'm looking at this because we already technically got the change of character here. And then we got this. So let's just go ahead and go with the starting point. Because technically, that zone was already a hit. Like that shit hit right away. We got the breaker structure to the upside. I'll zoom in for you guys. The breaker structure to the upside, change of direction, market came back in right away. So this red zone was actually a hitter. That thing was a smacker. That was a TP hit right away. But let's just say we're focused on the starting point now. Okay, cool. Minimum 1 to 3 risk to award. We'll even use the high for an example, just for a better example. That way it stays 1 to 3. 1 to 3. So we know we want to see, right? We want to see sell rejections off of this zone here. So let's go ahead and take a look. Market's printing, doing what it's supposed to do. Now, sooner or later, it's going to come into our zone and tap us in. Market just tapped us in. Now, at this point, we have to have good money management, right? 1 to 1. You guys just can't understand the strategy. A strategy is just the tip of the iceberg, right? This is my break even. I need to understand money management and trade management, right? Because that's also going to help me protect my capital. And it's also going to help me gain some capital, even if the trade isn't like a 100% smacker, right? So I know where I want to enter. I know where I put my stop loss, and I know where I have my take profit. 1 to 1 is my break even. 1 to 2 is my take partial. And obviously, if we were looking to hold this trade, you know, if we were actually looking for swing sales, then obviously we can do what it does. But for this example, we'll just keep it like this, because again, we're trading on that 1 minute time frame, right? We're looking for the reversal on the 1 minute time frame. Exactly, Anthony. Exactly. This right here is overlooked. Now let's take a look. Market's hanging out. Market gives me my break even. Now look, I should have moved my stop loss to break even. So at this point, I should be out of the trade. But let's say I didn't move my stop loss to break even. Market goes my way again. Market goes my way again. It hits my break even again. Let's say I don't break even. Because why? Because I'm undisciplined. I think every trade I take is going to be a winner. So I don't move my stop loss to break even. Got you. Have a good night. Let's say the market goes my way again. Hits my 1 to 2. I should have partialed out money. I should have paid myself a little bit. Let's say I was up $50 from this trade. I could have closed out half of that and gave myself $25, right? But let's say I don't. What does break even mean? What does break even mean? Okay. So let's just say, we'll delete this for visual. Let's just say break even, right? Let's say I was risking $25 here, right? Whatever, every trade you take, Veronica, you should understand what you're going to risk, right? So let's just say I was willing to risk $25. Now, as soon as it hits 1 to 1, I should be up $25. Does that make sense? Because whatever I'm willing to risk, if it's 1-to-1, that's pretty much my profit. Now, as soon as it hits 1-to-1, I like to go break even. Most people will partial out, but most people will go break even. Right now, what does break even mean? Is they'll move their stop loss literally from -25, and they'll put it at their entry, which usually gives you a 0 loss, maybe like a couple cents or $1, depending on what leverage you take. But you can also put your stop loss a little bit in front of your entry, so then you end up coming up a couple cents, but you're protecting your capital. So instead of risking your $25,
I think you're muted, Benny.
No, I heard him. No, he's good.
Okay.
Yeah, he's not.
I was like, nah. Okay.
Well,
All
my
right.
bad, my bad. My
Nah,
bad.
you're good, bro. It probably froze on your side. Nah, you're good. That was funny though. 'Cause anyways, so yeah, you're protecting your capital, right? You're moving your stop loss from the negative to 0, so you pretty much lose nothing. Does that make sense, Veronica? Okay, gotcha. Now, partial, right? What partialing is you're taking a piece of that trade, you're taking a piece of that winning and pulling it out of that live trade and putting it into your trading account, right? So there should be a button that says, partial trade or something like that inside of MT5 or Trade Locker. I use Trade Locker, so it says partial, take partial or something like that. But yeah, so let's say you're up $50. You can close out half of that and put $25 in your trading account, so your capital grows, and you leave 25 on the playing field so you could potentially earn more money. Does that make sense? Okay, cool. So now back to this scenario, right? We should be break even because market already hit my break even line. Market had already hit my take partial zone. So we should have already took money off the playing field and into our trading account. But let's say I don't do that because I'm inconsistent and I'm not disciplined, right? I don't practice these things because I think I'm the best, right? Now let's go ahead. Market just goes the opposite way and hits your stop loss. So instead of being up in profit, right? This is something that we have to practice, guys, because not every trade we take is the one. We can be expecting certain things, and the market may even give us the things we need to see, and the market may even give us an entry, a break even, and a partial. It might give us everything, but what if it doesn't hit our 1 to 3? What if it gives us everything else but our 1 to 3? And we were able to take break evens, we were able to take partials, but because you know what, you're a toxica and a toxico, and you don't listen, y'all don't listen when the market tells you what to do. That's the thing. So if you guys are experiencing this right here, I know how you are, bro. Stop it. Stop it. Listen to the market. When the market, most of the time, guys, right? The market may not give you that, like, oh man, the market just melted, bro. Market just melted. Sometimes it don't give you that melt type action every single trade you take. But you know what? Sometimes it does give you. Sometimes it'll give you a break even minimum. So let's just say market gave us an opportunity. The market gave us an opportunity to go break even, and we didn't listen. And then what happens? The market gives us profit, break even, and then we end up losing. Has that happened to anybody? Right? You're up, you're in profit, $20, $100. I know some of y'all are on demo. So maybe y'all up a couple hundred, right? You guys are practicing with larger amounts of money, so your percentage is different. Y'all probably see 1,000. If you guys are trading indices, it's all on the demo and how much you guys have, right? Especially based off percentages. But how many of you guys have seen you guys can be up X amount of dollars, and because you don't participate in practice and break evens, taking partials and money management, you see yourself, instead of having a blue day, you end up having a bad day. Has that happened to anybody? I mean, I know I have. I'll be the first one to tell y'all, like, yes, that happens to everybody, especially when you first get started. You don't know about money management. You just think, oh, I trade levels. Like, I'm gonna be good, right? You know, like, oh, I trade smart money. Like, I understand. Like, I'm good, right? Like, no, there's more to it, right? So trust me, being up in profit X amount and then watching that shit reverse from big dollars to negative big dollars, you're just like, okay, I need to fix that. And that's this right here is how you fix it. So JV, if you didn't practice this, bro, we need to start practicing and implementing break evens and taking partials. And then you know what? And if the market does end up reversing and hitting your stop loss to break even, hey, we saved our capital and we live to trade another day. This is why it's very important to give you guys, to give yourself, rules. How many trades are you going to take a day? Well, how much, what are you willing to risk in percent in percentages a day? You know what I mean? I really don't like to risk more than like 3 to 4% a day. And I usually take, or each of my trades is at 1%, and I do like to test trade a lot of my trades. So not even like my first touches are 1%ers. Like, I break my risk up super, super small, so I'm giving myself the most maximum, potential with my money as possible. I don't want to lose nothing large. If I take a loss, which we all do, I don't want none of my first losses to be like big. I'm just like, oh, bro, I don't even want to trade no more. So I like to test trade. I like to test trade heavily. Now, when we go back here into this area, right? He was expecting sales on this. Oops, I'll just move this out the way. He was looking for sales on this. Now, JV, if this is my entry, right? What's up, Anthony?
That you know how it violated right now, that cell zone,
Yes.
the one we were just looking at, you could use that as a possible buy zone, right? After it breaks the high.
Yes, and that would be more of a scalp opportunity as well. So yeah, I mean, if that's something you're looking for, like something like this, the market definitely violated, right? It violated. It looks like the potential re-entry would have been right here. You violate, market came back into this area. It looks like it just missed, but market continued.
Where would your stop loss be at that point?
So if you're looking for the violation setup, once we get the violation here, once we see, okay, market definitely violated, we got the break and close above the stop loss. Potential entry would have been the starting point on the 1 minute. And then the second one would have been this right shoulder violation. Now, because the lowest entry that I'm looking at would be this zone, right? The shoulder violation. I'm usually putting my stop losses at the lows below that. So this would be my stop loss here. If you want something a bit looser, it would be this one. But
Okay.
but if I was looking to enter at this right shoulder violation, I'm not trying to just put my stop loss in a random spot. I want to look below my right shoulder violation, right? Below that, and find a low. And I can use this one here. Again, with the minimum 1 to 3 risk to reward. So obviously this would have been the one that I was looking to get in on, if that was something, we're targeting. It is slightly
Sure.
missed. Yes, sir.
Thank you.
Yep. All right, so back to the higher time frame example. All right, so JV, check me out, bro. If this is the touch, right? The market touched my zone. What the heck? Market touched my zone. Where is my breaker structure to the upside? I'm only giving you this to look at, bro, so you can't even mess up. Where's my BOS to the upside? Awesome. Where would my change of character line be? Let's go, baby. Let's go, baby. You see how easy that is? Sometimes we don't have to stress ourselves out dropping down to a lower time frame trying to catch the move. Does that make sense, guys?
Hey, in some sense, my bad. In some sense, like with the breaker structure, that would be like your resistance, and then the change of character line would be your support, right?
Correct.
Oh, okay, okay. I got a click moment for sure.
Yes, sir. It goes hand in hand, bro. It goes hand in hand.
Yeah.
Awesome. Yes, sir. Let's drop down the 1 hour. Now look at guys again. Is NAS bullish in this area? Would you guys consider NAS to be
Yeah.
pretty bullish in this area? Yes, right? Now, when the market is bullish, what do we look for? Inverted head and shoulders or regular head and shoulders?
Inverted.
Inverted, right? This is what we want to see. That's what we want to see. So we can look for some possible buys. Now, just because we're expecting possible sells does not mean the market is going to sell off yet. Right? Now, look, check this out. Anytime we see a break of structure to the upside, we should already be thinking trend continuation. Now, on the 4 hour time frame, it's fairly clear. We have the 4 hour starting point right here. But on the 1 hour time frame, look at what we have right here, guys. What would you guys consider this?
Consolidation.
Consolidation, right? Awesome. Do we have a BOS to the downside?
Yeah.
Yes. Right. And obviously, this breaker structure to the upside would also be considered my change of direction in terms of inverted head and shoulders. So we would have an inverted setup right here. We have left shoulder, head, continuation to the upside. Now, if the market wants to come back inside this area, this is a possible buy zone still, right? Because one, we have a 4 hour starting point along with a 1 hour head and shoulder zone. So again, guys, we're not trying to be too aggressive, right? I know as soon as we see BOS, you automatically want to be like, okay, reversal's happening, so we can get this head and shoulder. Don't think that. Do not think that. Most times when people see this, they see BOS. Once they see the market start coming back down, they automatically start thinking inverted head and or a regular head and shoulder to sell off. This is what they want to see. This is what they want to see. But they're expecting it way too soon. When you see a break of structure and the market is coming down, what should you be thinking about, guys? When you see a break of structure to the upside, what should we be thinking about?
Uptrend.
Uptrend, right? We should be thinking continuation, right? Retest, possibly, yeah, find your zone for a retest, but we should be thinking uptrend. So when we see BOS, we should be thinking trend continuation. The market possibly wants to go ahead and continue trend. This is why the change of character line is so important, guys. So important, right? Because if we get a break of structure to the upside, we should be thinking trend continuation, and markets can possibly continue higher. Now, if the markets break and close below, then we can start thinking sells. But once you see BOS, guys, look for the continuation first so we can continue the buys and know where your change of character line goes. Because as soon as that change of character happens and we get clapped, let's say you took a buy and you get clapped, guys, you know exactly what you should be doing next. We know exactly what we should be doing next. We adapt and we look for some sales. Does that make sense?
Yeah.
Let me know. Let me know. So now look, check me out. When we go up here Market gave us a BOS of the upside. And the markets have been fairly bullish with indices. They've been pushing up quite a bit, since these lows down here, quite a bit, right? This is the closest buy area to live price. Live price is right here, right now. Closest buy area. So if the market comes back down and we start seeing this, what are we thinking, guys?
Buys?
Say it with your chest.
Buys?
Let's go, baby. We should be looking for some possible buys so we can continue to shift that market up. And if we get clapped, if we end up taking a loss looking for buys and we get something like this, what are we looking for?
Sells.
Sells, because the momentum switched from uptrend to downtrend. Does that make sense, guys? Give me a question mark if that does not make sense. Let's go. Let's go. Sells off the same shoulder zone. Okay, you can if you want. That would be a head and shoulder violation when the market breaks and closes, retests, and drops in that area. But for me, I like to refresh, right? I like to refresh, and I usually delete all this stuff here. Oops. All right, for an example, I delete all this stuff. I refresh. Oops, I don't want to delete that. I refresh and I focus on what I do have. I have a break of structure. And let's say the market does break and close below, giving me, sell opportunities. Then I flip my bias from, instead of buys, I'm looking for sells. And for that, I'm looking for my shoulder to be here. Right? I would have left shoulder, head, change of direction. When the market makes its way back, I would like to take some sell opportunities and send the market down. I like to refresh, right? So when when the market is bullish, right? When the market's bullish, I like to look for inverted head and shoulders. Inverted. So we can go ahead and look for some potential buy opportunities. Now, when the market is bearish, I like to go ahead and look for, let me move this out the way. I like to go ahead and look for regular head and shoulder opportunities. Boom. So I just flip it. Does anybody have any questions? Any questions at all before we end the call tonight? Because I do have another call right now in the next few minutes. That one's probably live as we speak, and I don't want to be late to it. Any questions, guys? Let me know. I hope today's call, brought you guys some value. Hopefully you guys got some clicking moments. Because I know for sure, I had that problem as well. My first 2 years, I would drop down to the lower time frame and try to catch that snipe at the tippity top. And I would get caught. And I'm like, why am I getting caught like 2 to 3 times before the move happens? And it's because I was participating inside of liquidity, and most of the times, especially when you're new, after taking 1 or 2 losses, you're like, bro, I'm never trading again this week. And I know that's how I was, and when you have that fear mind state, you're gonna miss the trade that was meant for you, because those trades that you lost, that you were playing too aggressive in, they brought fear, right? They brought fear to you. And that's why staying consistent is so important. Follow the trading plan, guys. Follow what you're looking at. Trust your eyes and what you're seeing and take these opportunities. The thing is you guys can't over leverage. You cannot over leverage, because then it F's up everything you did. All your progress that you did, you over leverage one time, it messes it up. I don't recommend it to anybody, right, to do this live. But hop on a demo and just watch how fast those numbers hit zero when you over leverage. Do not do this on a live, but watch. I promise you guys may have a couple that are like, oh, but look at, I came up big, but those losses, those things hit bigger, bro. You over leverage, those things hit bigger. I promise you. Not only that, not only does it hurt the trading account, it's this. This right here is what you want strong. You can always build the trading account. You can always fund the trading account. But once this breaks and this cracks, it's very hard to gain your confidence back. Once you see how much money you've gone down and you're in the negative, it's very hard to get this back. It's hard to bounce back, psychologist, you know, on the psychology side of things. You have to stay sharp. You really do. So make sure you guys are calculating your trades. You're not over leveraging. You're trading responsibly, and just make sure you guys are waiting for the confirmations, guys. That's all I can tell you. Listen to the market. The market will let you know when it is ready. Stop being toxic. Stop trying to rush moves. The moves have to play out. You have to see everything play out before you take opportunities. Stop trying to foreshadow things and get in early. Wait for the confirmations, guys. With that being said, you guys have a great trading week. A great weekend. Have a great weekend. I will be uploading the levels calls in the next few minutes. Well, after this call, I'm gonna go ahead and take some time and upload some of the last calls I haven't uploaded. But you guys have a great weekend. Make sure you guys tap into Neri's backtesting call tomorrow. Ask your questions, take your notes, and let's just continue to get better, guys. I will see you guys on Monday. You guys have a great weekend. Peace out.